Let me throw it back to Shireen at the NSE. Shireen.
Nice.
Well, I think we woke up this morning and everyone's talking about recession and we're likely to see a bit of a pullback. The lucky mascot came in there and she said that she wants to see the market in the green. And as I was listening to you guys, I said, yes, it's in the green. So pretty good start for us. 23rd birthday, we are celebrating in style. Navneet, since you're on my side for the time being, we're trailing the index a little bit. The index is actually at around 18,500 thereabouts. We are at our 23rd birthday. I want to know when that catch-up takes place. When does the index run ahead of ourselves? When we celebrate our 24th, 25th birthday, can we see the index closer to those levels?
Not too far, I guess.
Yeah, so by next year, you think so? That'll be a far cry away.
It's a long-term story. I don't think there's any point predicting the next 6 months, 1 year. Maybe Madhu and Sunil can do that.
Let me try my luck with Sunil and Nilesh.
Okay.
Sunil, the big disappointment, or maybe the mid-cap and small-cap has relatively underperformed in 2022. You've been in the mid-cap space for so long now. What is your sense for 2023? Will the mid-caps and small-caps do a catch-up, or the valuations are still expensive, so that one should avoid the mid-cap and small-cap space?
So first of all, congratulations to CNBC on a fabulous journey. Incidentally, my daughter also celebrates her 21st birthday,
oh, wow.
So I think this opportunity to wish her happy birthday, Kushi. So I think if you look at the constitution of the Indian economy, Indian economy is driven by entrepreneurs.
Right.
And that means that we have a lot of budding entrepreneurs who want to, do something for their own self, for the businesses. And I think that is what mid-cap and small-cap is all about. It's all entrepreneur-driven businesses. And the good thing is, if you see, so many unique businesses are coming up. And so many new businesses we have not even thought about are getting conceptualized. And, the spirit of entrepreneurship is there. And I think as long as the spirit of entrepreneurship is there, and as long as growth is there, the smaller and mid-sized companies will always grow faster than the large caps. The only thing is that because they are smaller in size, I think in a challenging year like this one, where we had a war and we had 30-40-year high inflation rates and interest rates shooting up, I think despite that they have held their ground. So I think the highway is just about to come, and there's a long way to go. Not only for the mid-cap and small-cap, but for the economy as a whole. Okay. And I think to Nigel's question, I'm very sure before 25th birthday we'll do a catch-up.
All right.
That's a good one. That's a good one.
So that's
Madhu, I want to ask you, your big bet middle of the year was PSU banks, and that's played out beautifully well. Are you still bullish, or do you think now there are a couple of other sectors as well which you are equally turning bullish, like you in PSU banks?
I think as Sunil was saying, this is a time to really identify individual companies. While the PSU bet has paid off, I think there are tremendous opportunities in mid-cap and small-cap space. And let me just say, I don't want to spoil the party, but when we hear about this 10-year, 20-year bull run in India, and everything looks like a Ram Rajya, at that time we have to be a little cautious that we should not take out our hat of risk. We must ensure that adequate allocation and intelligent allocation happens, and it is nature of markets that there might be correction and there will be correction. That is how markets have been. But I would say in that correction, you have to decisively buy, because the India growth story will continue.
Okay, all right. Nilesh, I want to ask you a question, and I promise you, Nilesh, as I've told you in the past, I'm keeping my SIPs going. My children are going to see a very good future once they go to college. But from here on, what about asset allocation? 2023 people are saying it's going to be a little bit of a tough year. So from the top, asset classes, equity, fixed income, gold, let's not talk about crypto for now, right? I think it's gone out of fashion. Incremental allocation from here on, real estate as well. What should it be to?
So one, thanks Nigel for maintaining SIP. Your kids will remember you as a great father.
Absolutely.
Number two, as Madhubhai mentioned, asset allocation is key. It was important yesterday, it is important today, it will be important tomorrow. And in 2023, it's quite likely that the return differential between different asset classes, be it debt, be it equity, be it real estate, will narrow down significantly. So maintaining a proper balance between debt, equity, real estate will be critical. And if there is a correction in market, that will be the time to go long equity or increase allocation to equity. Now coming to the stock, I want to add one thing. See, stock market is exactly like CNBC TV studio. Not the one you have in Parel today, but the one where you started the journey. It was in Worli area, and we had to go through a mountain of coal to get into the studio. So stock market is also like coal mine. There are diamonds there, but you should know how to navigate the way.
Okay, all right. So, we're talking about a marathon in the short sense, so we're not talking about the 100-meter run. But, Ashish Chauhan, sir, just a quick word. It's been a good journey. We have reached out to you numerous times, and you always lend us a ear, and you always try to help us out as well, and it's been a great journey. Just a quick comment from you. Our 23rd birthday, a message to our viewers as well.
No, congratulations. I think CNBC has been a mature child from day one. So I think at 23, I think it's a very, what I call, sometimes when I watch TV, I think people are being motivated to play 2020, while investment is not even a test match. You have to play many test matches in your life, and that's where I think CNBC is focusing on. So I'm really glad, and somewhere, although it's 22 years complete, and I can see my people who we started career with, Madhu or Navneet or Nilesh, they are being called veteran and I am still an upstart. and basically we are on different sides of the game. We are like umpires, not to be seen, but if we get seen, then the game is not going well. So I'm sure all of you all continue to maintain the decorum going forward also, and that's what my fervent hope is.
So I think the players are doing well, the umpires are doing well, and the commentators also were doing well, right? We all agree, right?
Nigel, we have the Lupin management as well joining us today. So let me toss it to Ekta. Ekta, you can just grill the management. Don't grill him too much.
Well, Ramesh, we're talking about the past 2 decades in terms of our birthday. But at the same time, pharmaceuticals and healthcare has also grown exponentially at that point. Where do you think we're probably going to be 2 decades from now when it comes to pharmaceuticals? I'm not talking about the near-term hiccups that a lot of the pharma companies face.
Well, firstly, we are here to celebrate CNBC's 23rd birthday, so it is inappropriate to talk about Lupin at this stage. But having said that, let me first congratulate the management of CNBC for a great achievement, world-class business, economic and financial reporting from India. And as India transitions from a $3 billion to a $7 billion economy in the next few years, this is going to be extremely important. CNBC has been a great platform for potentially bringing in the regulated, the regulator, the government and industry for disseminating our perspectives and obviously educating a lot of people. Turning to healthcare. Healthcare in India has come a very long way, but having said that, we have actually been big into re-engineering. Products that so the paradigm was low-cost manufacture in India, low-cost R&D in India. We are now kind of transitioning into the innovation phase. The branded markets for potentially the emerging markets are still alive. But having said that, as we transition to the innovation space, you could expect Indian pharma also to kind of blossom and do extremely well in the long term.
So can we expect an innovative, patented drug from India in the next 2 decades?
I would say yes. There are a lot of companies focusing on that, and I would expect certainly that would happen over the next several years, so to speak. We all are pretty optimistic.
Okay. Back to you.
All right. Madhu, we earlier heard from Samir Arora, and he was saying these new age themes, some of them have started becoming attractive right now. And he's seeing some exhaustion, that's what he said, and that's the general sense. Nimesh has been alerting us, this large trade is going to take place, another one is going to take place. Most of them are getting walloped up. What's your sense on this theme from here on? Madhu, I'm not asking.
I'll be very honest, they have become analyzable. So I would say that, they were beyond our reach when they got listed, and it didn't make sense at all to invest any time on these companies. As per the valuation metrics and the experience which we have had, they have corrected significantly. These are very good businesses.
Yes.
I would say they've created tremendous platform. They have a very good corporate governance. Some of the leaders who are leading these companies are extremely passionate and good. So I have started spending time on these companies, and I am sure somewhere down the line they will become good buys.
Okay, interesting. So Nimesh, that supply overhang, it appears
it's going to be there. It's going to be there. There is a lot of supply.
I think as my friend, philosopher and guide Rakesh used to say, अगर लड़की अच्छी है तो बिहाने वाले बहुत मिलेंगे. Don't worry about the supply and all. You know, there will be buyers and sellers in the stock market, so all the supply will get absorbed at a price.
Okay. All right.
You know, since we have so many of the market veterans here with us and the referees as well, and we're going into the MPC in a short while from now. Let's do a quick dipstick. What's the expectation? 25, 35? What do you expect from the MPC? Sunil, let's start with you.
No, I'm not an expert, but what I heard from experts yesterday, it's 35 basis points.
35 minutes.
I'll go with 35.
Madhu?
I think it's a mere consensus. 35 bips is what I would
What about
expect.
you, Namit?
Consensus, 35.
35.
Looks like it's a consensus for the RBI policy.
And the RBI governor is listening in it.
Nilesh, I want to ask you something. You know, I've heard you in so many presentations talking about, you know, past examples, and you know, instead of buying Eicher motorbike, which Nigel drives, had bought the Eicher share, you would have bought you know, a Mercedes or a big car today. Any new company that stands out for you, which looks like, you know, that's going to be the next 20 years or 30 years for you?
Well, I can't talk about stocks, so I'll say invest in Kotak equity funds. And we hope that one day your bike will get converted to Rolls-Royce.
Interesting one. In fact, I got my first salary from here and I went straight to the showroom in Bandra and I booked the bike for that, you know, very minimal amount and took the rest on loan.
So on that point of car, I think it was very heartening for all of us in the industry that luxury car manufacturers said that cars are selling less because people are doing
Doing more SIPs.
rather than doing EMI.
Nilesh, what do you have to say about that?
So one, I mean, clearly savings and consumption both are necessary to drive economy.
Yeah.
So in all our messaging, we have always said that you should buy a bike and also buy the shares. Just don't buy the bike, just don't buy the shares. Because if you only buy shares and no one buys bike, then shares will not go up. So do the both things. Equilibrium, balance, allocation is necessary between savings and consumption.
Right. Now, at this stage of my life, Nimesh, but even I'm going more for a bigger SIP rather than the bike. So I don't mind riding the same bike. Nilesh, I'm on the right side. All right.
You know, since we have the Lupin management here, what I want to understand, and just to take the point that we heard there from Nilesh forward, there's been a lot said about corporate India's risk appetite. And the finance minister on several occasions has asked corporate India to go out there and invest and start the cycle of investment. What's the sense that you get at this point in time? There's been a plethora of PLI schemes across 13 different sectors. The first one, of course, was for the pharmaceutical sector. How is that playing out so far for industry, and what's the expectation from here on?
I think the government has done a grand job in terms of several things in the last several years to kind of augment capital formation in this country, starting with, in fact, rationalization of the tax structure itself, the PLI schemes, and there's more to come, you know, essentially. So I think all of this will certainly go a long way in terms of augmenting the overall capital formation. It's about 30% of the GDP, but one could expect that to potentially grow exponentially in the years to come, and that will set the stage for India 7 trillion and more, and as Mr. Ambani was saying, 40 odd trillion over the next several years, so to speak.
Yes, Sunil.
So, Sirin, on the PLI side, I think we still need to take our game to the next level. Yesterday, I was talking to one multinational company. They are putting up a $25 billion plant in China. The promises, according to them, is 3 months environmental clearance and 12-month factory operational, and also allocation of gas from Russia. Now, this is the game China is playing. If we have to compete with them, we still need to take our game a lot higher than what it is today. We have all the ingredients, but we need to ensure that the central government, state government and local government works together in delivering seamless delivery to the entrepreneurs. Today, I don't think so we have the ability like China to say that in 12 months I'll make your factory operational. Intent is there, but we need to now execute on the ground through seamless delivery between state, local and federal government.
Yeah, that's an important point that you make. And you know, we're talking about China, and of course the theme over the last few months has been that China is increasingly uninvestable, but that doesn't seem to be sort of the reality on the ground, Nilesh, and you give us an example of that clearly not being the case.
Yeah. So China is still getting more foreign direct investment than India. And Chinese equity also has started attracting some investor interest, especially in the month of November and December. My feeling is that China is a tactical play. It's so cheap that you want to take a trading punt on it. India is a long-term growth story. We are expensive on a one-year basis, but on a 5-year basis, we are cheaper. So India will be more strategic allocation and China will be tactical allocation.
Okay, all right. Since we're talking about China, Sunil, I wanted your opinion on the metal space itself. And I'm not getting to stocks, Sunil. I'm cautious about that. But, I have checked, the holdings that you all have. And a couple of those names, got in very, very early. And some of them are doing well even today. What's your sense from here on? If China is going to unlock, is that metal play going to come back with regard to stocks that are listed in India?
So first I have a little bit of a view on China. So I've traveled a lot last 3-4 months meeting a lot of investors. I think China last 10 years has been a disaster in terms of an investment destination for investors.
Yeah.
And obviously India, despite all its ups and downs, is a country which has doubled in dollar terms, more than doubled in dollar terms over the last 10 years, which is a CAGR of almost 8% plus in dollar terms. I think that yes, in the last 1.5 months, Chinese and Hong Kong stocks have moved up. But this time, investors would look at this rise to trim China and invest in India. That is what my view is. Valuations and all is fine. We have seen valuations for some countries always been high and some countries always been low. And if you go back, look at Japan, look at Korea when they were growing, look at China when they were growing, and now India is growing, I think valuations can go berserk. So that is one thing. Secondly, on your point about metals, I think what has happened last 4-5 years, that the metal companies had this sweet spot of 2 years where they were able to systematically clean their balance sheets completely. So the debt, I would say the debt to EBITDA, which used to be like 3-4x or 6x also in some cases, now become half x. So even in this kind of an environment where there were export duties and China was shut down and prices had collapsed, companies were still making some profit. Now with things opening up, and you can't replace metals with some technology, you need metals for metals, our view is quite constructive. The only thing is, these are not like 5-10 year structural stories. These are 2-3 year, I would say, cyclical structural stories rather than 5-6 years, and therefore you have to have the patience of getting in and sitting on it with no performance maybe for 6 months and 12 months. And you're right, a few of them we have picked up, but the good thing is that I'll only highlight our winners, we don't highlight our losers. So that
Sunil, I didn't highlight them yet, even the winners.
Madhu, you were early in identifying the PSUs and the PSU bank stocks. Is this now the time for the infra plays as well? Again, a sector which has not been tracked much, not been chased much, there is hardly any ownership. Is this time now to look at infra stocks as well?
I would say so, Ramesh, and I've been very vocal in last few interactions with you guys also, that overall the whole sector has become cheap, the competitive intensity has gone down, they have cleaned up their balance sheet over a period of time, and there has been very little or no stock performance in the last 10-15 years, I would say. And whatever was the pending dues from the government side, significantly it is also getting cleared. And if you look at order book of these companies, in the last 1 year also, a lot of these companies have lifetime order book positions.
But they've rallied also, right? The rail PSUs, the defense PSUs, they all have rallied hard. Is this time to now look at private companies?
That is the whole point, Ramesh. This is the India story.
Okay.
That it is not about identifying a sector or a theme. It is ultimately betting on the right companies. And I can bet there are a few right companies that still exist, which will give you good returns.
Okay, yeah.
So as Madhubhai mentioned, infrastructure sector long term, it has hardly delivered any return. But if you picked up right stocks, you still made decent return. Our infrastructure fund 10-year SIP return when I last looked was 17%.
Okay.
In a sector which hasn't delivered any return to investors, by picking up stocks you were able to generate return.
Okay, valid.
This is the point, this is the real India story. This is a real India story, wherein, if you have just bought the right companies and the right theme at the right time, then you have made money. There is, in all of this glamour, ultimately you have to be able to get to the right companies and the right sector to be able to make the differentiated returns.
Yeah.
And those who don't want to spend time on researching the stocks, I think for them the best way to play the India story is a 10,000 rupee SIP in HDFC FlexiCap fund is what one sec, it's 12 crore rupees. So if you want your children to be crorepati for sure, that's the way to do it.
Nicely done, nicely done.
But the coincidence, Shireen, but the coincidence that HDFC AMC got incorporated in the same year as you got set up.
Yes.
So that time the Sensex was hovering around 3,000 to 4,000 for almost 3 years. And it was a tough time for you, I'm sure, to create that cult of investors who watch you, and at the same time for us. But today we manage 4.5 lakh crores, and we talked about how the industry has grown and how you have grown. So that's the India story. Over the next 20 years, as we are entering this Amrit Kal, it's only going to be better. We need to have that faith. Our time has come.
Okay, our time has come. I just, on that point, want to get Ashish Chauhan into this conversation as well. I just want to understand from you, because you've seen the complexion of this market change dramatically, as Navneet was pointing out, from where we were to where we are today. If you were to mark the key milestones as far as the market journey is concerned in building this cult of equities, what would you hold out as the key milestones?
I have always believed that maintaining trust of people as a system overall is the most important part. And somewhere on the line, I think we had a big break in 1991-92 where things went wrong. And that's where I think liberalization happened. That's where the automation of markets happened. First time in the world, Indian markets were the pioneers of automation, screen-based trading. The televisions came, and I think overall the kind of regulatory structures we have evolved, I think it's amongst the best in the world in terms of moderating things and maintaining trust of people. Ultimately, what is stock market, right? An unknown person is investing money in completely unknown person in an unknown city. You are not, as an investor, you are never going to visit that company's plants, but still you have a complete confidence that your money will not go waste. And when the profits come, again nobody will take it away. And that is your trust in your government, in your stock exchanges, in your regulators, and also of the people. And for me, what we do today, every day, using CNBC, otherwise using these veterans who invest money, is basically enhancing that trust. Till the time we trust each other, we'll continue to grow. When we reduce that trust, that's where we have an issue. So I always say that we are all drinking out of the same pond, and let's not dirty the pond, right?
Yeah, absolutely. I think we've got about 2 minutes to go, so let's get wrap-up comments from each one of you. Madhu, I'll start by asking you, where do we close 2022, and where do you believe the markets are likely to be in 2023?
I think, again, I would not hazard a guess for 1 year, Serene, but longer term bullish. I think in the short term, there is a possibility that markets will see some correction in 23.
Sunil?
No, again, I think very tough, but I am a little bit more optimistic. Obviously, 22 has been challenging. I think 23, and particularly in the run-up to the general elections of 24, and also the fact that the world is going to be significantly better in 23 than it was in 22. I am more optimistic on 23.
Follow Nigel, sip karo, mast raho.
Children are going to enjoy.
The mood in corporate India, what's the expectation for 2023? Pause, or do you believe that we are likely to see a lift-off of investment?
I think the secular trends for corporate India are very well set, so it is going to be optimistic in the years to come. Well, can't speak about, in fact, the immediate future, but the long-term trends are very, very palpable.
Navneet?
The formula for wealth creation is sound investment, plus time, plus patience. So while doing the SIP, remember that STP, and you will do very well.
Okay.
Ashish?
For me, whatever you do, please sort of be moderate and be disciplined. Thank you.
Be moderate and be disciplined. Nimesh and Nigel, a final say with the both of you before we let the MPC take over the action.
Well, Shreen, unfortunately, we have not had a look at the markets in a while, but, we are in the midst of an equity cult that's developing.
Look at the markets today. Just look at the green color. And that's the
green color. That's the mascot. That's the mascot, but markets looking pretty okay. We have some of the rates that are going up there. So the Nifty Bank is in the green with a gain of around 0.2%. The RBI governor's commentary is going to be very, very important, Nimesh, and later on, as the course of the day goes, I'm sure you've got some tidbits for us as well.
For sure, we'll do that. I mean, towards closing bell, we'll do that for sure. But I guess, I think for at least for the first half, the RBI policy is going to be very important. Though it's a consensus that 35 basis point will come, but let's see. Let's hear out from the governor himself at 10 o'clock and let's see how market
I
reacts.
think what's going to be important is also the commentary and whether there's going to be any change as far as the stance is concerned. That's where there has been some disagreement, even as far as our CNBC TV18 poll is concerned. So we are going to thank all of our guests for joining us here bright and early at the start of our 23rd anniversary celebrations from the National Stock Exchange. Thank you very much to each one of you for being here with us. But remember, it's another very important event coming up. The MPC will tell us what happened as far as the rate trajectory is concerned. And of course, our fabulous colleague Lata Venkatesh will pour over all of the data and the fine print. What does the commentary say? Is it going to be hawkish or dovish? All of that coming up for you through the day on CNBC TV18, and of course the celebrations will continue. We are going to take a short break and be right back with you with the RBI MPC. That and more in a minute.